later here. We had our morning Devo and it was running a little long. I was trying to see if it would finish and wrap up, but they just kept going, and I finally had to just switch over here to lead you guys today. And if you've tuned in to what our topic is, I just want to start out by saying that today is a really hard topic because if you were to ask us, everyone here at Tradeway, what do we want? We want our students to do extremely well. We want them to attain the information. We want them to use that information in a profitable way. And we want everybody to come out feeling like, man, that was a great investment. Like, I'm glad I took the time to learn the education. I'm glad I went through that process. I'm glad I did that. That was a really good decision for me. It's like it's benefiting me. It's benefiting my family. It's benefiting my church. It's benefiting my community. It's benefiting people around the world. We often say our goal is to help you reach your goal. And so, today's topic is tough because we work under the realization that some people struggle, and all of us struggle at times. I don't think there's anybody that says, it hasn't ever been a problem for me. I haven't struggled at some point. If you can go back and read some of the greatest traders right now out there, a lot of them will say early on, I had some major losses. I did some things and took some serious expenses. And you can read their stories and hopefully maybe be inspired by that. But the reality is that they had to go through a learning experience, and it was not pleasant at some times. And, talking about today's topic, common mistakes that people make, it's a really hard topic because I think oftentimes we don't like to admit where we might be getting off track. And I think that that's something that can be true of any area in our life, that just generally speaking, we don't like to be told that we're doing something wrong. Whether we are or not, I think there's just something inside of us that just doesn't like being told that we're wrong. And yet, if you are wrong, if you're going the wrong direction, you actually want somebody to tell you you're going the wrong direction. You can push the pedal faster and go faster, and you'll still be going in the wrong direction. And so, to actually tell somebody they're doing something wrong isn't being mean; it's actually being loving. Because you don't want them to continue to go the wrong direction without getting hurt. And so I think a lesson like today is hard because of that. But there is a reality that there are times when we need to appropriately evaluate whether or not I am really doing things right. I think most of us feel like we are, and there are many times when I have had a student say the system isn't working. And I'll say, well, can you send me a few of your trades? And I'll evaluate their trades. And sure enough, I look at it and I go, man, you are doing bullish trades at resistance, and you're doing bearish trades at support, and you're trying to figure out why the system isn't working. And it's pretty obvious here that you're not really doing the system. In fact, you're doing the very opposite of the system. So on the one hand, I know this person is passionate. I know they're trying, and I know they want to do well, and we want the same thing. So we want them to do well. They want to do well. And yet there's something missing, right? There's just something that's not connecting. And oftentimes when I do the evaluation of their trades, it can be pretty clear. Now there's some times when we look at it and go, oh, you know what, that just stinks. You did a lot of things right. Here's maybe something that you missed, but more often than not, we can really trace it back to, no, you're not really doing this right. You didn't see this. You didn't do this right. You didn't really follow the system the right way. And again, that may be hard to hear, but hopefully we would be, and I'm going to use this word, and it's crazy in our society how offended we get by truth, but mature enough to hear that there are things that I might be doing wrong, that I could be wrong. I could be, not doing something right here. And the reason that I'm not getting the results that I want is because I'm not doing the things that I should be doing to get the results that I desire. And so when we think about common mistakes, one of the things that I would say, the biggest thing I would say, is fighting the market tone. So if the market is going down, generally speaking, you really want to be in bearish trades. And this may seem like completely just like the most simple thing ever. Like, what in the world? Of course, I want to do that. Um, but I will tell you, in doing this for now over a decade, it is probably the biggest factor in what people have done. I think if you look back at their trades and say, man, I didn't make a lot of money during that time, I'll say, what was the market doing? It was going down. What kind of trades were you doing? I did a lot of bullish trades. All right. Well, the market was generally going, up during this section of time. You look at this over a period of months or years. You know what? I was doing a lot of bearish trades. I just thought that any moment the market was going to turn. I was looking at the news. I was interpreting the news, and apparently I didn't interpret it correctly because I was going bearish, thinking, at any point that market's just going to fall, and it didn't. It just kept going up, and I was in a bunch of bearish positions. So fighting the market. There is a really good thing to learning more about the economy and how it works, and how the Fed raising rates should impact the market. I think there's a great value in that. I think there's great value in understanding news and how it ought to impact the market. But the next thing I would say, the biggest next common mistake that people make is misinterpreting how the professionals, traders, right, those that are moving the market, we call the big boys, are going to respond to news. And I think this actually takes quite a bit of time to really understand this, because sometimes they'll respond in a way and you go, well, that makes a ton of sense. And then other times they'll look at it and go, yeah, we're not really going the direction you thought we would. And so in that situation, you kind of have to work through it and go, well, okay, that's a weird movement. I was really not expecting that. I would have thought that you guys were going to sell off of that news, and yet you're out there buying. So now we have to kind of balance this thing. What do I think versus what do I see? So what's actually happening in the chart? And am I following what's actually happening in the chart? Am I following what's happening in my head? And that is a major common mistake. The third thing that I would talk about is feeling like you have to have things like perfectly aligned. Like we have some students recently that said, you guys have been doing a lot of trades, but you haven't necessarily been drawing support or resistance lines. And let me go ahead and address that, guys, because there are a ton of trades out there that do not require that. There are a ton of trades that are going to be moving between EMAs, or they're going to be making particular patterns, but you wouldn't necessarily be able to go out there and draw parallel lines, but you can go out there and do a trade that makes money. And so the third thing I would say here is that we have a tendency as newer students to really get caught up on things that we think matter, but really don't. So in other words, if I showed you a trade, but you really couldn't draw the lines, but that trade made you a few dollars a share, would you rather be focused on making a few dollars a share, or the fact that I'm not going to do that trade because I didn't see the lines? Okay. Now, again, there's a balance here, because if it came down to it, would we want you to see the lines? Yes, we would. We would want you to see lines. We would want you to have that support and resistance. But remember, EMAs act as support and resistance. So if we can't see clearly how to draw the lines, but we do clearly see exponential moving averages, we can use those as our entry and as our target points, and then obviously as our stop out as well. So trying to understand really how all the things fit together, and not making some things really more important than they should be. Like when people get to step 2, they just get really just kind of just, infatuated with the idea of delta. And they're like, it said I was supposed to make 70 cents per dollar move, but I only made 60 cents. What's the deal with that? And I'm like, look, it's not an exact thing, right? So don't major in the minors. All right. So that's the third thing I would say, is don't major in the minors. There are certain things that really do matter more than others. Timing. All right. Let's talk about that. That would be the fourth thing. There's an idea that there are certain times when I should trade and certain times when I shouldn't. So let's talk about that from two perspectives. One is there a time of day when I shouldn't trade? And the answer is no. There's not a time during the trading day when you can't trade. So that could be like the first few minutes of trading. Now, keep in mind, particularly if you're trading options, in that first few minutes of trading, especially if things are volatile, don't be surprised if you have some pretty wide spreads between the bid and the ask price. that's pretty common. So you've got to kind of wait till things kind of, slow down a little bit for them to narrow those spreads. But if you're sitting there going, man, this trade is really going against me and it's just getting worse and worse and worse, better to get out then than to wait, right? So there's not an imaginary time when the professionals aren't trading, and we just need to avoid trading at all. Now, are there times when I think it kind of makes more sense? The last hour of trading, I think, makes a lot of sense, but you want to trade at the best possible time. So if your stock hits support and it's 11 o'clock in the morning, cool. If your stock hits support at 8:30 Central in the morning, that's the time to go. If your stock hits support at 2:30 in the afternoon, right, 30 minutes before the market closes, that's a good time to get in. So now let's talk about, that's just short-term daily stuff. What about like overall? Are there times when I should or shouldn't trade? So what if there's a major news item like a Fed report? So should I not trade Monday, Tuesday, and then Wednesday morning because the Fed is going to say something on Wednesday afternoon? No, you can trade. A lot of times there's going to be speculation moving into that news announcement anyway. And if you can align your trade correctly with where the market's going, then you can make money Monday, Tuesday, Wednesday. If you say, well, I still want to get out before the actual event, but you can do that. But you don't have to miss 2 good potential days of trading because you're waiting on something that's going to happen on Wednesday or Thursday later that week. So again, you do want to see what the market is doing, but don't be afraid of trading if the opportunity exists. And the next thing I would say that's the biggest common mistake, all right, and we probably should have started with this because it's probably the biggest one. You have to learn to stop out. You have to learn to stop out. And stopping out isn't just a discipline issue. We had a speaker that worked for us for a while, and he said, if I make a plan and I say, I'm going to do this in this situation, I'm going to sell here, I'm going to stop out there, and I make that plan before I get into that trade. And then I go and get in that trade, and then I'm supposed to stop out, but I don't. We often think of that as a discipline issue. Like, I need to become more disciplined at stopping out. He said, I actually want you to think of it a different way. If you said that you were going to stop out when this occurred and you didn't, that's not really a discipline issue in and of itself. It's an integrity issue at that point, because now you're not doing what you said you were going to do. And I know for a lot of people, when they hear it that way, it really changes the way that they think about it, because they're going, oh man, it's not just a discipline issue. If I said I was going to stop out and I didn't do what I said, this is more problematic than I realized. And the important thing about stopping out, everyone, is that you need to understand that in order to win big and lose little, you have to enter a trade where that's even possible, but you have to maintain the losing little. Okay. You have to maintain the ability to lose little. And you say, well, Jeffrey, sometimes I stop out and then the trade ends up working and then I get frustrated by that. So how do I deal with that? Well, what I would say is, if you did the same thing 100 times, would you be more likely to have more money not stopping out, or would you be more likely to have more money by stopping out? And I suspect that for almost all of us, the answer is, if I looked at 100 trades that I did and I stopped out when I was supposed to, or didn't stop out when I was supposed to, you would have a lot more money by stopping out than you would by letting those things go and then playing with surely, hopefully that, things will turn around. Like, surely it'll go the opposite way. Like, surely it'll come back in my favor. The other thing that you're doing when you don't stop out is that, whether you're doing it knowingly or not, is you're creating bad trading habits. So even if that trade works, what you're doing is establishing in your mind that if I trade this way, I get this result. Well, if you did something wrong, okay, or against the rules and it worked, now what you're saying in your mind is, well, when I don't follow the rules, my trades work. So whether it's consciously doing that or not, you're creating in your mind a mentality where you say, well, you know what? I'm going to do this, and I'm going to do this every time because it worked for me one time, or it worked for me 2 times. And what I would say to you is, okay, so it worked once or twice, but is it likely to work the next 8 times? Is it likely to work the next 98 times? And the reality is, no, it's probably not. More often than not, you're going to end up with bigger expenses. And if you end up with bigger expenses, now you've dug bigger holes. And filling in bigger holes takes a lot more time and a lot more effort. And we want you to win, right? We want you to be making money. We want you to be happy about this. And so when you dig a bigger, deeper hole, and now you've got to climb out of that hole, now you're frustrated and you're fighting through the emotions that have to deal with that. And then you're fighting through the reality of, I have to go make even more money now than I had to previously just to make up for that expense. So let's just say you start out with like $10,000 and you lose half of that money. Well, now you're down to 5,000. And so you go out the next year and you double your money. So now you've made 10, so now you're back up to 10,000. You go, I've been doing this for 2 years and I'm right where I started. So look at your mentality. You go, I might as well quit. It's time to move on. I've been at this for 2 years and I haven't made any money. But the reality is you just doubled your money and you're thinking about quitting something where you just doubled your money. Like, that's just wild, right? It's crazy. Like, why in the world would I think about quitting something where I just doubled my money? That's fantastic. But our mindset is, well, I've been at this for 2 years and I'm still right where I started. Well, it's not that you doubled your money. It's that you lost half of it in the first place. So, that's like driving the wrong direction for so long that you go, oh, great. Now I've got to turn around and drive even twice the distance just to get to where I was supposed to be. Guys, and we don't want that for you. We know that you don't want that for yourself. So we have a thing like this to kind of help you understand. All right. So there's wisdom and there's experience. I can go learn all these hard lessons, or I can learn ahead of time. You know what? I don't want to do those things. I don't want to make those mistakes because they're not going to lead me the direction that I want to go. So if I'm trying to get where I want to go, then what I want to do is be aware of common mistakes that others have made before me. History repeats itself, and say, okay, well, I'm going to work really hard to avoid those things. It doesn't mean that you won't do any of them or you won't do parts of them, but as a whole, you're going to say, well, I'm going to work really hard to avoid these things as often as possible because I want to realize they're not going to get me where I want to go. And again, you want to go here. We want you to go there. And we're working with you to try to help you reach your goals. So avoid those common mistakes, guys. Thanks for being with us today for another Tip Tuesday, and we'll see you guys next time.